Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. The late February, late March bullish Andrews pitchfork, highlighted in dark blue on my daily chart, drove the market higher throughout April and into mid-May, making new all-time highs. However, this beautiful, if very acute, bullish Andrews pitchfork eventually shot too high and made a V-top over the middle of May, eventually punching up through the top of the pitchfork before turning back down and busting down through the bottom of the pattern below at the time what was the previously often mentioned congestion zone, 97.50 to 99.95. This time on the way down, the market did not hesitate, as it did back at the turn of April into May on the way up, but punched down through it and also now seemingly down through the green highlighted short medium moving average, currently at 98.29. Below now is the next congestion zone between 93.95 to 96.06, with a smaller one thereafter between 91.83 to 92.56. That right now has the medium moving average, currently 92.47, running through it. In the process of moving lower, the market exited one pattern and into another. From a bullish Andrews pitchfork into a bright red highlighted descending wedge pattern, currently 96.50 to 10.071. Both are quite narrow and acute patterns. Until this bright red descending wedge pattern is broken or morphs into another pattern, then only it will run the move lower. However, under the medium moving average, we have the 50% Fibonacci line for the July 2022 to May 2023 move at 90.29. And under this, near the long moving average, currently at 87.66, is the 50% Fibonacci line of the October 2020 to May 2023 move. Either of these two would seem a suitable place for a halt and maybe a new pattern, or a new idea perhaps. LME 3-month aluminium. Please excuse the red highlighted text on my daily chart. Sometimes my charting package decides to throw a wobbler for no apparent reason, and this is one of those times. So the red text is not necessarily anything special. So back to the aluminium market, and the move higher over March, April and even May originates back in late February, with the market breaking higher from a diamond pattern type formed between late October 2023 to late February 2024, highlighted in green on my daily chart. Now, I grant you, it was not the best looking diamond pattern type. As I said repeatedly back then and ever since, it had merit. However, the market took its own sweet time in moving up to the topside targets, but get up there it did. The next feature was something I pointed out 12 weeks ago and ever since. It's a bullish bow tie formation of the moving averages. This was due to kick in between the 9th and the 16th of April. As you can see from the daily chart, in between those dates on the 15th of April was when we had the big spike higher that ended up as an indecisive doji cross of all things. This huge move showed the topside potential of the market for the next few weeks. As part of this move higher, we had a gap move up over the weekend between the 12th and the 15th of April. We spent the rest of April and early May gradually moving down to fill in this gap, which was done early 4 weeks ago. Since then, prices started moving back up through the high on the 15th of April at 27.28. Now, 2 weeks ago, the market made new recent highs, but at the same time sowed the seeds of its own bullish destruction by making a pipe top that was also part of a larger 2-week horn top. We've moved down ever since. Now, over the last 2 weeks, I have drawn both an acute bullish Andrews and the less acute bullish shift pitchfork for the late February to mid-May action, but neither, I realise now, were a fit for the market action, and I've retired them both. What we have left are two patterns. In the near term, the action since the pipe top formed 2 weeks ago is now a small bearish halfway hesitation, potential down to just below today's low in the 25.15 zone. So the low today has been 25.29, so it's not that far away. This pattern is almost done. The second pattern is a larger one and takes in the action from mid-April to date. It's possible larger double top pattern, Adam and Eve type. I say potential as the neckline for this double top is around 2508 to 2515, and what we do once we get down there, assuming that we do get down there, which seems a reasonable assumption, what we do when we get down there, well, that will determine the next phase of this market. Right now prices are punching down through the rising short medium moving average, currently at 25.54. LME 3-month lead. I said 13 weeks ago, and I quote, I suspect the key overhead resistance will be the same as in late January, the congestion between 2182 to 2189. Now please remember this quote, or rather remember that 2182 to 2189 level, as it will become relevant again. Okay, so the elephant in the room is something I've been calling it for 5 weeks now, is the bright red highlighted mid-February to late March bullish Andrews pitchfork. In late May, the market breached the upper time, currently at 23.76, but it repaired itself, or so it seemed. But the breach allowed a bearish infection to set in that ended up being a horn top. That was the high point of this recent move higher. And into June, we have seen prices fall. Last week, the market breached the neckline of the horn top, and by the end of that week had punched down through the congestions around two significant 50% Fibonacci supports. The ones for the whole of 2022 at 22.25 and the one for the June to October 2018 move at 22.21. In doing so, the market also reached the primary target at 22.15 for the horn top. And today, just about where the secondary hard to reach target for the horn top is, down in 21.73, we've reached that. This week's drive lower has moved towards the next congestion, a wide band from April, roughly between 2186 to 2135. That has three 50% Fibonacci lines in it. The November 2023 to May 2024 move at 2176, the May 2023 to May 2024 move at 2167, and down at the lower end, the March 2020 to March 22 move at 2135. In the process of driving lower, the market has appeared to form an acute, narrow, dark blue highlighted bear channel, currently 2156 to 2232. Until prices break out of this dark blue bear channel or morph into some new other pattern, then this bear channel will run things. Key levels to watch in this lovely dance will be the bright red lower time, currently at 2162, though this has not been tested before, plus the rising medium moving average, currently 2154, and a flatlining long moving average, currently at 2145. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.